The opening up of China's financial markets over the past decades brought significant impetus to the internationalization of China's currency. In October 2016, the renminbi was added to the International Monetary Fund's special drawing rights basket, ranking third behind the US dollar and euro. 3 years on, what is the Chinese currency's influence in international foreign exchange reserves and payments? What are the challenges in the currency's global acceptance? What are the latest moves by the government to further reform and open China's financial system? To discuss these issues and more, I'm very happy to be joined in the studio by Qi Qiang, Assistant Director of the International Monetary Institute at Renmin University of China, and Paul Gillies, Professor of Practice at Peking University, and via satellite we shall also speak to Hong Hao, Chief Strategist at Bank of Communications in Hong Kong. That's our topic. This is Dialogue. I'm Yang Rui. Welcome to Dialogue, gentlemen. There's no question that China aspires to be one of the major currencies, I mean, in terms of RMB's role in the international monetary order. That reminds me of what happened in the immediate aftermath of the September 11th terrorist attacks in the year 2001 when Alan Greenspan was attending an international conference in Switzerland. On his way back, he was only thinking about two things. One, whether his wife happened to be in one of the Twin Towers. The other, whether the global payment of the US dollar would be destroyed as a result of the terrorist attacks. That somehow illuminates the importance of a global payment, the most important currency. There's no match for RMB at this moment. But what do you think of China's ambition, if any, about using at least one currency above the sovereignty of a single nation state in the wake of the financial meltdown in 2008?
Well, I think the world would probably be better off to have more currencies that are actively used because I think it provides more stability across the world. I think, though, it's a long-term process for the yuan to gain the kind of stature to be able to challenge the long-established position of the US dollar.
Here is one controversial concern about whether multiple currencies will serve the purpose of stabilizing the international monetary market, or the other way around. We use a single currency like the US dollar, which serves to, to quell the jitters and stabilize the whole general situation.
I think obviously the answer is we should use multi-currencies to serve the international financial system. Because with multi-currencies, it means we're using more countries' GDP and the services and products they can provide to stabilize the supply and demand in the whole world. This is absolutely true. Because, as an international reserve currency, you will always suffer from one dilemma. On one hand, you print the money or issue the money to serve your global, to serve the domestic economic growth target. But on the other hand, you also have to issue the money for the international demand. And sometimes these two goals just doesn't cope with each other. Sometimes if you print more money, you will get the inflation in your own country. But the international society doesn't get enough. But on the other hand, sometimes if you don't have enough money, your domestic growth, sometimes you will shrink. And also the international society will also suffer from the other problems. So sometimes it's hard to get the balance.
Good point. So let me cross over to Hong Hao, who's standing by in Hong Kong. Let me talk to him about whether these two guys in the Beijing studio are talking smart about having the utopian multi-currency in the world's financial market, or do you think in the foreseeable future we have to rely on the US dollar for much of the reserve currency or global payment? What's your hunch?
Yeah, well, I think it's going to take some time for the RMB to challenge the US dollar's long-standing reserve currency status. If you look at the composition of the SDR currency, the US dollar takes up about close to 50% of the weight, and the actual reserve holding of central banks around the world is well over 60%. So I think the US dollar, especially relative to the country's GDP, is way overrepresented, and it's a representation of a dollar-centered system. Now, I think the problem with such system design is that, for example, recently, there's a huge havoc in the US repo market. Reason being there's a huge US dollar shortage in the system. So people just can't get enough of U.S. dollars for funding U.S. dollar liquidity. So as a result, you saw a dramatic surge in the U.S. repo rates, overnight rates to 8%, well over 8%. So I think in a system such as this, it actually introduced quite a bit of fragility into the global financial system, especially during the time of crisis, where you need it the most. So I think that the existing system needs to be re-engineered, but I think it's going to take some time, probably years, before another alternative system can be applied to replace the existing ones.
According to a report from the Society for Worldwide Interbank Financial Telecommunication, or SWIFT, in August, the yuan's share in international payments increased to 2.22%, up from 1.81% in July, marking its highest level since 2016 and the fifth most used international transaction currency. What do you read into yuan's status in global payment transactions? What do you think of the decrease or increase in the importance of RMB?
First of all, I think Chinese yuan is making a steady progress. We've been increased from nobody to one of the important players in the international transaction system. That's very obvious. But you have to understand that international transaction and payment is a very complicated issue. One of the reasons China why didn't play a much larger share as its GDP played in the whole world, because China is the #2 GDP size of the country in the whole world, right? That's because China doesn't have a fully opened capital account. The reason why American dollars and euro have a larger share in the international payment system is because they have a fully opened up capital account, which means when some other countries and when some other corporates, when some other players, if they want to use the US dollar or the euros, they can get whatever they want as long as they have their own US dollars or euros, because that capital account is fully open. So it's easier to use US dollar and euros because they have a much more matured financial systems and endurance. But for China, in order to protect the country's national financial safety, and so we still have fully opened up our capital account. So sometimes it's not that easy when the extreme situation happens. It's not that easy to get the RMB liquidities as easy as the US dollars. So that's the reason why a lot of people, countries hesitated to fully resort to Chinese yuan. But still, as you mentioned very correctly, a lot of other countries, they signed a deal with the USA government because they have the bilateral currency exchange scheme, which means if one country, a friendly country, financial friendly country with USA, if they're suffering from the fluctuation in their own currency, domestic currency, they can ask US government for loaning as much as US dollar as they want to keep their own currency stable. They can take a detour around the IMF. So it's a P2P arrangement. But for China, it's hard to do that as now. But China, for its GDP size, we can do that for limited partners like to Russia. So, and that adds to more security and stabilities for some other countries like Iran, like Russia. So they can balance the international payment system. They're not pegging on their product and service to just one country's international currency. Now they have more choices.
That issue put aside, let me go back to Hong Hao for the old issue about the free convertibility of the RMB, given the closure of the capital account. Well, the Chinese authorities promised to further open up its capital account, but despite the glow of allegations and the rhetoric from the authorities, many who invest in China complain bitterly that there would not be free outbound flight of the capital, despite their big chance of making good money here. What do you think of their grievances?
Well, I think in the past, the conditions for opening China's capital account is not mature just yet. And therefore, back then, even the classical economics dictate that, you should have a free-flowing capital account so they can control your interest rate and your currency exchange rate. But, for China, it's simply not the case. If you still remember in 2015, when we depreciated the Chinese RMB by a couple of 10-20 basis points, then it creates a huge havoc in the financial market. And also between late 2014 to 2016, the Chinese forex currency reserve actually down by about $1 trillion US. So basically, all the hot money were gone during that period. So that sort of shows us the danger of opening the capital account too quickly and pushing currency reform too quickly. So I would say that for the Chinese currency to become a foreign currency account, it has to be willing to run a huge current account deficit. And at the moment, we're still a current account surplus country. Now, to go from a surplus country to a deficit country actually takes quite a bit of getting used to it. Right, so I think it's a process. It's happening. Now we are deepening the currency reform, and also we just have an LPR reform, which is related to how the currency rate is being determined by the market. So I think we're moving in the right direction, but at the same time, people just have to be patient about how China gradually open up its capital account.
Thank you very much, John. No one questions the ability of the Chinese monetary authorities to be resilient and to survive, for example, two financial crises in 1997 and 10 years later, 2008. However, when you put China in a comparison, the parallel comparison with South Africa and Russia, in these two cases, they allow the money to fluctuate between or in a broader band. I mean, this surprised me. This did surprise me, because I don't think South African economy and the Russian economy could be a good match for our resilience. And yet, their monetary authorities could allow for greater fluctuations and even a lot of uncertainty in the monetary market. Let me know why, Paul.
Well, I don't know much about South Africa, but Russia, a lot of their economy is driven by oil, and oil is priced in dollars. So I think that gives them a certain amount of stability that wouldn't otherwise be available.
John, both South Africa and Russia are categorically emerging markets, and I wonder if you have paid particular attention to their monetary policy.
Yes, I paid attention to their monetary policy, and their currency has been fluctuating widely larger than Chinese currencies. The reason for that is actually very simple. Russia and South Africa, their currency has been pegged to the value of the raw materials, like the coal, like the iron ore, like the oil and the natural gas. And that
so they could be the victim of resource curves.
Yeah, that's true.
In a cyclical way, right?
Well, they're not on purpose to try to depreciate their currency. Mm-hmm. That's because when the whole world economy is shrinking, the demand for the raw materials has been dropping. That's the reason why their currency has been fluctuating. That's following the trend of the real economy. Same situation happening with Australia. The reason why China doesn't follow that kind of a situation is because China has been largely in the long time ago, we have been shifting from a country exporting the raw materials to value-added services and product. That gives us more resilience. That's the reason why you can see Chinese yuan against the other currencies has been more stable.
Yes, of course, a majority of American policymakers, including President Trump and his team, have been left increasingly puzzled by the unique way that the Chinese government runs its own economy, financially and in terms of trade. They got angry with us. Professor Qu, China has already signed a currency swap agreement with more than 30 countries and regions. And in 2015, for example, the country introduced the cross-border interbank payment system, attracting hundreds of banks around the world. What did this move actually mean?
Well, as an owner, this is a currency swap treaty or agreement has been signed between America and a lot of other friends countries, and which help those countries to maintain their trade and international payment and currency stability. But not every country are friends of the USA, and not every country can get the general endowment from the Federal Reserve. And in some way, a lot of countries need this guarantee for international payment and transactions, and also stabilities for their own international reserves. And at this moment, I think China has the capability and the responsibility to kick in, because if the whole society has been stable in the transaction and international payment, I think it's better for all of us. The case like in Iran, like in Russia, sometimes, or some small countries, they cannot afford to take a loan from Federal Reserve. And now with this situation, China kicks in, guarantee the payment and transactions with our number 2 GDP size. I think it's good for not only China and our agreement countries, but also it's good for the whole international financial community.
Thank you so much. You are watching Dialogue with Paul Gillies and Qi Jiang, as well as Hong Hao, who's standing by in Hong Kong. We're discussing the future of RMB, whether it, as one of the major currencies of the SDR, be further internationalized to live up to the expectations of some of the major economies. We'll be back in a short while. Stay with us, please. Welcome back, Paul and Qi Jiang. Critics argue that the U.S. dollar's dominant status in the global financial market allows the U.S. to borrow with impunity without dampening investor sentiment towards American assets. 10 years from 2008 financial crisis, is there any change with dollar's dominance? Are we strong enough to weather another U.S. financial crisis? Because there is this alleged curse of every 10 years we're going to have a repeat of the financial meltdown. So far, we are approaching the Christmas, and there are no apparent signs indicating yet another cycle of financial meltdown. It should have taken place last year, because last year was the 10th anniversary of the financial meltdown that broke out in Wall Street. What do you think of the prospects of having a repeat of such kind of nightmares?
It seems we might break the cycle this time, which should be quite positive. But you know, I do agree that the U.S. does have advantages that come from its currency being so popular as a reserve currency and as a transaction currency around the world. And it's a big part of America's soft power in the world, is the ability to use its currency that way. And the euro, everyone had hoped would challenge, but the euro's had its own problems.
Ironically, the U.S. dollar, quite against the expectations of most of the users, has been weaponized in the case of Iran. That's why the euro, the EU has decided to opt for their own alternative, SWIFT. China has also made up its mind in an increasing use of currency swap schemes, offshore RMB clearing centers, so on and so forth. A lot are being done by the Chinese monetary authorities to minimize the risks of using U.S. dollars. As I said earlier, it's being weaponized by the Trump administration. That's pretty dangerous. What do you think,
Yeah, that's true. Usually, if we use one country's currency as our international transaction tools or network, it's always a choice of economy. U.S. dollar absolutely have their advantages. It's stable, widely used. But sometimes if you put a lot of attached string on it, and then you probably add to extra risks. For example, as you mentioned, just the Trump government, and even before that, Clinton government. I mean, W. Bush, the government, all they weaponized the U.S. dollar and the payment system to track down the behaviors or the government. They don't just like it. So there's going to be a problem. Some are really criminals, like the drug cartel. They're worth to be bashed. But some others, they're just probably have a different opinion. So that's a reason why we need more of the diversity of this payment system. Sometimes, the European countries will also be bashed down because they're competing with United States governments in a benefit or in a business with American corporates, and Chinese companies as well, because they have a conflict of interest in the business world, only business world. And now with the current payment system, the SWIFT system, you only need to input one code. You can track down all transaction dots and the nodes. You can track down A paid B, paid C, and paid D. Everybody is exposed to your scope. That's going to be dangerous and violating a lot of countries' privacy, corporate privacy, and security. So that's more than ever. We need a diversity and a choice of payment system. I'm glad you mentioned about the cryptocurrencies. Actually, cryptocurrency is not just a coin, not just a currency. It's the whole transaction clearing and payment system and network. It's P2P system. So probably it's going to give us a more choice. Maybe it's right, maybe it's wrong, but worth a try.
That's perhaps why the PBOC has decided to seriously consider the use of digital currency. Let me cross over to Hong Hao about the issue of using digital currency. Everybody was talking about the growing importance of Bitcoin. And the PBOC has agreed to set up a special research institute to focus on the issue of Bitcoin. Bitcoin is said to be one to decentralize the financial institutions in the sovereign state. Do you believe the Chinese monetary authorities are catching up very quickly to be kept posted about the latest situation? What do you think is going on?
Yeah, well, I think the Chinese Central Bank is probably one of the first major central bank to launch investigation and serious study into using how to apply digital currency in the real economy. And as you said, Bitcoin is more about superseding sovereignty and also the right to print money, basically, and taking these rights away from the central bank, away from the government. So it's actually probably the ultimate form in terms of currency, in anti-government sort of status. So I'm not entirely sure how that kind of status, the anti-government status, and the sovereignty of a country's central bank can sort of go hand in hand together. It's not entirely clear to me just yet. But then once a central bank formally launches its own digital currency, it can actually become a efficient currency in the real economy, and also in terms of circulation, you have more control as well, and there will be less underground black market transactions happening in the real economy, which can be a substantial part of the Chinese economy. And I think over time, it's easier to introduce that into the global community to become a commonly recognized and used form of currency. So there are many benefits in launching China's own digital currency, but I think once again it's going to take some time, because the study are preliminary. I think Bitcoin is still in its early days as well. I think more and more people is just trying to get their heads around these new forms of currency.
Having said this, Hong Hao, let's look at the other issue. China recently announced it would remove the investment limits for qualified foreign institutional investor, or QFII, and renminbi qualified foreign institutional investor, RQFII. Question is, Hong Hao, how will this new policy impact domestic financial and capital markets, and how significant are such moves in boosting China's financial reform and opening up?
I think the initial impact is minimum, in the sense that the QFII and RQFII quota has been around for some time, and for a number of years hasn't been using up. So even if you increase the quota or increase the limit for the foreign capital to flow into the Chinese capital market, the fact is that the original channel isn't filled up just yet. So even if you increase the limit, it's sort of meaningless in the near term. But then in the longer term, though, I think it's a sign that a strong sign that the Chinese capital market is opening and is welcoming foreign capital to come in. So if you look at, for example, the Bond Connect program, within the space of less than 24 months, the Bond Connect program, the volume increased by 6 times. That is huge. Absolutely huge. So it's an indication that a strong vote of confidence of foreign investors in the Chinese capital market. And also this year the Chinese stock market is coming back to life as well. So many things are happening in terms of foreign investment in the financial industry. We've already seen foreign brokers, foreign investment investment banks setting up shops in China, either through a majority ownership in a local Chinese broker, or they independently own some sort of a independent broker in China as well. So things are happening. I think more to come in the insurance industry as well, and then 3 years.
But the issue, I'm afraid, let me come back to the Beijing studio. Excuse me, Hong Hao. Let me ask the two gentlemen here in the Beijing studio about the impact of approving the foreign investment law at this Lianghui in March, as well as further efforts to ease trade tensions between the two biggest economies. Why did we fail to see a dramatic increase in foreign investment, or FDI, foreign direct investment, in China? Is it still about an issue of lacking confidence? What do you think of the mindset of?
I think the big problem that many companies are facing right now is uncertainty. They don't know what the future is going to look like, and when you're making major investments, and the kind of investments we're talking about to be made in China, building new factories, are long-term investments, and you want to know you're going into a stable environment, and it just doesn't look stable right now.
Well, the situation is this. According to a paper done by the Fed in 2015, if I remember correctly, when there's a rise of the uncertainty in the whole world, it's actually a very simple pattern. When the uncertainty in the world economy happens, and all capital will fly back into USA, and when everything's lighting up, when the cloud has been going away, and then the US dollar will just go all around the world again. So this is just a return as a round trip of the American dollar capitals. So now we're in the certain period of uncertainty. So it's very natural to see the US dollar just go back to the safe harbor, go back to the USA or some other capital, safe haven, just to avoid the uncertainty. And I think when everything clears up, they will come back.
Hong Hao, do you agree that the two gentlemen in Beijing said loud and clear that it's an issue of few confidence on the side of overseas?
Well, I think confidence is an important factor in determining how people allocate their money. But I think, given China's still rapid growth at about 6% and above, I would say that the sort of a longer-term competition between rivalry between China and the U.S. is, it is already set. So it's a little difficult to sort of turn the ship around. So in that sense, if you look into the future, yes, it's less certain than before. But then at the same time, you see the entire world seems to be engaged in some sort of uncertainty or some sort of disputes between each other. The U.S. has disputes with EU, with Mexico, with Canada, with many countries, and President Trump is running a sort of a bilateral agreement or a bilateral negotiation with many countries. So I think in that sort of environment, the future, even though is more volatile, is that the direction is actually quite clear, which is that it's more volatile, less certain, but it's everywhere. So therefore, for an investor who is looking to invest in China, he or she has to compare the environment in China versus the environment somewhere else.
Yeah, despite the uncertainty and lack of confidence, we have to take a closer look at the innovation-driven and dynamic domestic spending with the growing of a sizable middle class for the domestic market. That could somehow dismiss our concerns for the uncertainty about internationalizing RMB. We're going to see what's happening next. Until then.